The income and expense statement, one of my favorite reports that is produced from Successware. This report gathers all of your day-to-day information that you've been collecting about your clients' orders and their sessions and your bill paying. And based on doing all of that collection information, it culminates right here to give you a lot of information in a very readable format. And it's not scary, it's just information that you can use to make decisions. You'll notice that all of these goals in this column, those are done in our business planning area so that you can look and set goals for your business. And goals aren't pie in the sky. Oh, I really would love to do 150 seniors when you only did 10 last year. Goals are based on what you've done. So if you did 10 seniors last year, based on not doing a whole lot of marketing, would it be reasonable for you to do maybe 15 or 20 this year? Or maybe you were part-time and there's no way you couldn't do 20, 25 seniors this year based on what you're going to be doing with your business. It's all based on what you've done in the past, basing that on information to be able to tweak your information to be able to maintain a guideline that you would like to follow for the upcoming year. It's one of the best things that you'll do for your business because it sets goals in place for you to follow. And if you're meeting them, great. And if you're not meeting them, you need to know where to focus. So it helps you to keep a targeted eye on what's going on in your business to see if something's working or not working. And this shows us how that does that. So if I were looking at my goals, I'm going to look at my product lines. And for locations, we're a little short of where we thought we would be financially. Well, we were a little short on numbers of sessions, only by one. Our sales average might not be as high as what we expected it to be. So we need to look at those things. Our promotions did actually a little bit better. We did a few more than we thought we would have done over the year. So what we budgeted for. Our seniors are a little down. We budgeted for 79, only did 66. Overall, we had expected to do 265 sessions, but we only did 238. Well, financially, where do we stand? Well, our goal is down based on total gross sales. So this is showing us that we're a little short of where we thought we would be. So we need to take that into account for when we're doing our plan for next year based on what we did this year. I'm going to look at our cost of sale percentage. If our cost of sale percentage was at 25% and we hit that goal, we're in pretty good shape. If we're a little higher or a little lower, we need to evaluate that based on how we're producing our products. That cost of sale percentage is key. And that is going to differ based on your type of business. It's different for every business owner. In the photography industry, we typically recommend between a 25 and 30% cost of sale. And that really depends on whether you're in your home or if you're in a freestanding building and paying rent, or you own a building that you have a mortgage on outside of your existing home. So that all depends on what that number is. PPA has a wonderful benchmark survey that they've done for the past few years. They look at different businesses and you can kind of key into what type of business you are to see where your cost of sale percentage needs to lie. It also helps you with general expense percentages to see where they are falling for your business type of business, whether it be a large type studio or a boutique type studio. It's going to help you to make those guidelines a little bit more sufficient for you to help guide you into where you need to be. The goals for expenses, again, owner salary, employee expense if you have employees. This literally gives you a guideline. These general expense categories are predefined within Successware. They're a little different because they're managerial based versus what we call custodial, which is a normal accounting package, deals with what we call custodial accounting. Not that this is any different, it's just defined differently so you can see things a little bit more clearly. And so by doing this, in a custodial accounting package, the people who get paid first are the accountants. Well, in our method is the owner and the owner's health insurance. Those are the things that go at the top of the list. And then the people that help your business come second. Outside services are people that work outside of your business that help you out. Maybe an outside trash removal service. You've got your insurance and rent and utilities, all the normal things that you pay for, but it's done in a way that makes it readable. So we have developed a little function area that's based on the how these things function within your business. So we're looking at your owner's compensation. We want to make sure you're getting compensated. Your employees, how many employees are working for you? If it's you and one employee and your employee is getting paid more than you are, maybe you should sell the business to them, go to work for them, let them take on your headaches of the studio and move on. But again, it's not realistic. You run this business, so you need to understand how you can make this function and how you can make a profit that's going to help you grow and fulfill your dream of being a photographer. We can look at this location overhead. Well, 15%, is that starting to get high where if you took that amount of money and put it into a mortgage for a building, would that be more beneficial for your business? Because 15% is getting to a point where you might be over the limit where you're paying rent, but maybe that rent can be going into something that's going to be around for a long time and that you can develop equity in. Advertising costs. If you're not getting enough business, are your advertising costs too low, or are you not doing a lot of that free marketing that's helping bring that business to your studio? Maintaining that low number might be okay. It just depends on what it needs to be for your business model. Administrative costs, we see those getting out of control where you're buying things and you don't know that they're being spent, and it helps you to focus these things so you can, again, see your percentages. One of the things that we see a lot of times in businesses and custodial accounting are line items for travel and for meals. And a lot of time you're traveling for purposes of education. And I'm going to go back to the bigger list here. And an education expenses under your number 5, your studio administrative costs. So education, we group your travel and meals that you're going away for, going to workshops and things in that area, because you wouldn't have to travel or spend money on meals if you were at home at your studio. That would be normal expenses, but this is outside expenses. And we found when you break those expenses up into smaller areas, you don't get that focus on how much money you're actually spending in education. A studio a long time ago that we worked with, we found that their education expense was huge, but they were taking their entire staff to conventions and spending money on meals and hotels. Well, they turned out that it was such a high percentage, it was about 12 or 13% of their business. They realized that they could cut that back and actually maybe take 1 or 2 employees to one convention, not to all the conventions. And they can focus it a little bit so they can put more money back in their pocket as opposed to spending it on something that might be a little bit more frivolous based on what their business needs to focus the structure so that they can bring home a larger paycheck themselves. They want to help their employees and educate them, but in the same token, they don't need to do it all. They can do it a little bit more focused. So you can see the leaks in your business more clearly in this manner. And the one key number here, your owner's compensation plus net profit, what's really cool is that this shows you how much money you compensated from your business. If you paid yourself a higher salary and your net profit was negative, that comes out of your pocket, the business owner's pocket, not anyone else's. And we want to make sure that you're getting compensated. So owner's compensation includes your salary plus the net profit in the business. That's what you take home. A well-managed business is about 20 to 30%. So this business is doing okay based on the amount of business that they're bringing in, but they might want more in their bottom line, more in their pocket. So we can help them, based on this information, focus their business efforts by creating a plan for the upcoming year based on this knowledge, and they can make those changes that they need to do for their business to better themselves. This report gives you all this information in a nice, neat little shell. And if you can't read it yourself, our staff here can help you do that. That's part of what we do. One other thing I wanted to pop out over here is your goals and your sessions. Same thing for your financials. We actually keep track of your session goals. And this business didn't do quite as many sessions as they anticipated. They need to look at the focus. Where were they down? They were down in a couple weddings, some studio portraits. Their seniors were a lot less than they thought they were going to be. They were a little more in promotions, so they promoted their promotions pretty well. Um, but they weren't really focusing their efforts in maybe the senior area where it looks like they were down, probably about $9,000 to $10,000. So that's something where we can start to focus on is maybe their average sales, maybe their marketing wasn't set up correctly and being focused in the best way. So these are all these things that we can help you with within this one report within the software. And it's pretty awesome because you have this capability right in your hands to view this information and to make use of it. And again, we're here to help you if you can't.